How is it going, everyone? It's John here. I talk about investing, I talk about credit, also talk about real estate investing. I've actually done 700 plus short and medium term rentals, and I'm going to be coming out with a lot more. I shouldn't say a lot, but I'm going to be coming out with several programs and maybe some services in that realm. So stay tuned for more content on that, and certainly some more services and programs for that. What are we going to talk about today? Something I think very exciting. Here we are. It's Monday, June 13th, and I don't think it's going to be remembered as a very good day in the financial markets. It's just continuing to crash. It's been just pretty brutal how bad things have really gotten. But hey, there's some good news, and the good news is that Tesla just announced that they're going to request a stock split, which is a 3-for-1 stock split, which is, I guess, pretty exciting. I mean, their stock's trading above 600, so that means their stock, assuming that that it doesn't change, which it will change, there'll be still around $200 a share, or maybe even a little bit higher. But basically, what they're going to do is they just really announced that they're going to present the 3-for-1 stock split. They're going to request that their shareholders approve that at the August meeting. So I'll just take you into the article real quick. Super simple article about it. And I also, did a recent breakdown of Tesla financials, so you can kind of see, how their actual financials look with respect to their, current market cap. Because even we're actually trading right now, Tesla is trading very, very close to their 52-week low. So I'm going to bring you into the market cap and show you actually what the figure is. But their revenues have really climbed. They're looking at like almost 100% year-over-year revenue growth rate. So their revenue growth is really just spectacular. At the 52-week low, or near the 52-week low, their market cap is basically as low as it's been in the last 52 weeks, right? So real quick, so super simple. Let's go ahead and take you into the article. We'll talk a little bit about the stock split that's coming up. Okay, here we go. All right, Tesla files to split shares 3-for-1 as investors bail on stock. Well, I don't know about bail, but Tesla said it will ask shareholders to approve 3-for-1 stock split at their August annual meeting, according to a proxy statement filed Friday, June 10th, right? And Larry Ellison is stepping down. If approved, this will be Tesla's second split in less than 2 years. The company executed a 5-for-1 stock split in 2020, leading up to the 60% surge in the share price from the day of the announcement to its execution date. The electric vehicle maker is clearly hoping that it will happen again, as having the shares trade at a lower price could entice the strong fan base among individual investors. So there you go. And if you take a look, here is the actual price right now of Tesla. So if you can see their 52-week range, the 52-week low is 593. Right now, we're about 6 minutes before the the market is going to close here in California, because I'm in Pacific time, and it's at 647 with the market capitalization of about 689, so about 690 in market cap. So let's take a look at their financials, everybody. I did a video recently where I went in and I basically look at market cap. I look at annual revenues, most recently reported 12-month annual revenues before, so I can see the year-over-year revenue growth rate, and then I look at gross profit number, and then also gross profit percentage. I do really feel that it really says a lot about a company to understand what that gross profit margin number is. Obviously, Tesla, they're making physical products like just some of the hardest physical products to make in the world, right? Cars. So, I think it's understood going into it. They're really not going to have that high of a gross profit margin. But considering the other automakers that are out there, I'm going to guess, I haven't done really aggressive research in this realm, but I'm going to guess that Tesla's got a much higher gross profit margin than other automakers. Right here you have their most recently reported 12 months at about 27.1% gross margin, the gross margin figure, right? So if you take a look at it, and then also this is the year-over-year revenue growth right here, as you can see, 97.2. Now what this is this is the most recently reported 12 months, and then I also used the 12 months ending in 2020. So it might not 100% jive, but what's happened is I actually took didn't do YouTube videos for kind of a while, from let's say the fall until even recently, and basically I had to really update all my numbers. So I haven't done my numbers in really quite a while, and you know, it's kind of fortuitous in a way to redo the numbers, because with the stock market crashing here as it has all of 2022, it's really good to kind of get a feel for, you know, what they're all doing. And the way that I look at things is I take a look at their gross profits, and then I divide them into the actual market cap to come up with a figure. In the case of Tesla, that figure is 39.7. So definitely like a higher figure in the group. I'll go ahead and put a video in here. I did a FANG video last week. FANG meaning, you know, Facebook, Amazon, Apple, Netflix, and Google. I took a look at those shares, because what's happened is Facebook isn't even trading as Facebook anymore. It's Meta. It's actually their symbol just changed to Meta. But with respect to Meta, they're trading at about, and this is again before today's, you know, the market's down pretty bad today here, but they're trading at about 50% of their 52-week high price, right? And then Netflix is over 70%. I'm sorry, Facebook. What I mean to say is 50. It's about 50% for Meta, but for Netflix, they've lost over 70%, right? So they're trading at about a little bit less than 30% of their 52-week high for Netflix. Definitely hurts me as a Netflix shareholder. Fortunately, I didn't really overexpose myself too much to Netflix. And I actually did some different business project through selling, you know, Netflix, you know, over the years, over many years, like going back to even 2014 and 2015 and years after. But basically, these are the numbers, yeah, for Tesla. They're a lot higher. We take a look at the actual gross profits into the market capitalization. If you look at like Facebook and you look at Netflix, it's really, really, really low. And just a little insight for you. I'll tell you this. I'll open it up. When I started buying Netflix, which was really back in 2011 and 2012, and I kind of came up with this whole concept of taking the gross profits and dividing them into the actual market cap, it was about, well, at the time, what it was Netflix was trading about 3 billion, and Netflix was my only 100x investment return when it hit 300 billion, which is certainly not the case now. But when it was at so again, when I went into it, it was about 3 billion was the actual low. When you look at my entrances during 2011 and 2012, 3 billion market cap for them was the low, and their actual revenues were about 3 billion. So if you actually assume, Netflix has been pretty consistent with their gross profits over the years. So if you assume a 35%, just for the purpose of this video, you know, 3 times 0.35. So that's 1. Basically, their market cap to gross profits figure was about 3 at the time when I went in, because if their revenues were 3 billion and their gross profits usually are around 35 to 38% always, that's pretty much, you know, right there at about 1 billion, right? So, you know, if they're trading at 3 billion and their gross profits are 1 billion, that's basically a 3x. And Netflix, with the loss of their 70% plus of their market capitalization, they're pretty close to that actually. I'm going to say maybe even twice that. So anyway, if you know, but they're still a growing company in terms of their financials, right? So anyway, this video isn't about Netflix, but it's about really the concept of how I take a look at the gross profits and then divide that into market cap, and then how we actually look at that with Tesla. So let's go back to this real quick. So there you go. So, you know, again, it's a little bit high, but, you know, Tesla still is trading at about pretty much at their 52-week low. So it might be a very attractive point of entry for a lot of people that were otherwise, you know, nervous about getting in there. So hopefully you guys like that. Everybody, I do have a background in investing, a professional background that is. First job out of college was Merrill Lynch. I also did some investment banking after that, and worked for Sun America in Los Angeles for 3 years. And everybody, I've been investing in stocks since 1989. I'm a Gen Xer. You know, was doing stocks back during the dot-com crash and all that, and in 2000, and then also certainly was in it during the financial crisis. And I'm still here, hanging on here in this post-pandemic crash, which seems like it actually is worse than any of them, right? But only time will tell, everybody. So anyway, thank you guys very much. Put some comments, what you think about the Tesla stock split in the comments area below if you have any. In the meantime, you can check out some of our programs in the links below. Okay, thanks a lot. Have a great day.